Good afternoon. I know it's tired towards the end of the day. We have a super special guest with us here today, Steven Kokinos. He's the CEO of Algorand. Steven, welcome.
Yeah, thanks. I was announced publicly 8 hours ago, so I'm excited to bestow all of my knowledge on everyone.
Very fortuitous timing. Can you tell us what was announced this morning?
So I was announced as CEO. Sean Ford, who was the CMO at LogMeIn, was announced as COO, and we also announced a $62 million financing round that we closed recently.
Multicoin is a proud investor as part of that round. If you could tell us, so what is Algorand? Why is this exciting?
Yeah, so just a little bit about myself. I'm a serial entrepreneur. Algorand's actually the first company that I've worked at that I didn't start, although I got involved in it pretty early. Prior to Algorand, I was co-founder of a company called Fuse, which is enterprise software collaboration. It's about an 800-person company today. We raised about $500 million there. So, I think both myself and Sean, we have a lot of ideas around and a lot of experience scaling businesses and really understanding how to build them up. And I think that's something that, at least from my perspective, is needed in the crypto space. Just a little bit of background on Algorand. It was founded by Silvio Micali. Silvio is, I think, by all accounts, the founder of modern cryptography. So some of the things discussed earlier today, he was a co-inventor of zero-knowledge proofs of verifiable random functions, and is a Turing Prize winner. And one of the things he felt early on when he looked at Bitcoin and looked at some of the sort of early proof of work is that while they were incredibly innovative and interesting, that if a platform was really going to scale and we're really going to have hundreds of millions of users transacting on blockchains and crypto platforms every day, that a different approach was needed. And so Algorand is really a ground-up rethinking of what kind of effectively a layer one protocol and of what sort of foundational tech looks like in the blockchain space.
Yeah, and if I may, so just for some context, the Turing Award is named after Alan Turing, who invented the first computer that was used to crack the decryption codes in the World War II. It's the most prestigious award in all of computer science.
It's like the Nobel Prize of computer science.
Yeah, basically it's the Nobel Prize of computer science. And Silvio is one of 30 people who's ever won the award.
40-ish, I think.
Yeah, 30 or 40 people who's ever won the award. So I mean, truly all-star team. It's funny you mentioned, right, Steven, your background is in running real companies. This morning, Fred, USV, who's one of your investors, Fred this morning kind of went off on the Ethereum Foundation for having a lack of general business operations. Can you talk to us, right? What are the kinds of things you're doing at Algorand to run this thing like a real business?
Yeah, so a few different things. I mean, one, we spent a lot of time thinking about sort of how everyone's incented. One of the things I thought was crazy when I first started learning about the market was that all these companies are basically selling 100% of their tokens or selling meaningfully all of the resource that they have up front. And maybe it's because I just didn't understand things, but my take was if you had asked me how much money any one of the companies that started had needed between start and exit, I would have been off by thousands of percentage points every single time. We had no idea. Excuse me. And so, we really spent time thinking about how we generate revenue over the long term, what different elements are there, how we really create an economy and not just think about tokens. And so I think we've tried to put a lot of thoughtfulness into that. And then separately, it's not only Silvio, we have a whole research team of very well-known academics that really are thinking about not only the protocol today, but how that evolves over time. And what we realized is it's not just about having the smartest people in the world, although we've got some of those. It's also, you have to be able to ship product. And so one of the things we've been thoughtful about as well is how do you pair people who come from a more academic background with people who have shipped real product and understand how to get things out the door, how to deliver high quality. And we think that the model we've put together there is working pretty well operationally. It's still early days, but definitely I think there are differences in the crypto space where there's so much hard science and so much complexity to the underlying tech that you really need people that have a good theoretical understanding and can help create that tech. But I think you need a mix of different sort of talents and personalities to actually get a product out the door.
So yes, you've talked about kind of fundraising and just general, call it balance sheet management. Talk about shipping product and code. One of the things we're most excited about Algorand is just your focus And as the title of this panel, Streamlining the Financial System, is kind of alluding to, right, like what's the focus for Algorand? What are you guys doing on the business front to make this thing, work in the real world?
Yeah, well, I think, I mentioned before that we're creating an economy, and that's sort of the way we think about it, I think, in some fundamental way. The models we've used, and I think we have some really interesting economic advisors that have helped us think this through, but if you look at a country like Singapore, or you look at a country like Canada, that are more, I guess, spoke countries, they have influence and they're substantive, but they're not the US government or the US financial system. They're not China or Germany or some of the other large economies. How do you think about ways to exist? So one, there's obviously a lot of discussion earlier today about stablecoins. We think that's a super important part of the ecosystem, but one of the things we're pursuing is relative stability. So really thinking about how we manage an exchange rate policy. And we haven't announced yet, but we hired a chief economist, and we're going to be publishing an exchange rate policy pretty soon. And one of our goals is to help people who come to the Algorand ecosystem really understand not only what the spot price is at any given time, but also have bonds over different time horizons, establish interest rates and an interest rate curve, and try to encourage trading strategies that exist sometimes in the traditional economies and sometimes not, to also happen within Algorand. And we think that there's like a whole host of really amazing applications in a decentralized world, and one where not only distributed or decentralized applications, but decentralized financial products, and then really layer 2 protocols that people want to build. We want to encourage all of those things to happen within our platform. And we think that part of that is having foundational technology that actually scales, is secure, and truly decentralized. And the way that we sort of liken it internally is today a lot of the platforms that are out there would be like the early days of the internet if there was no bandwidth. There's just only so much activity that can go on, and so really solving that is a fundamental problem. The second is giving people a way to understand on a relative basis, how we fit into kind of the broader global economy, both crypto to crypto, but also crypto to more traditional economies is going to be important, because connectivity in and out of different economies is going to be something that's very important, because we don't think that every transaction is going to happen in a decentralized economy, but we also think there's a lot of transactions that will happen in a decentralized economy, but helping people understand how to move between them is going to be increasingly important. And that sort of has, I think, helped create those 2 pillars that then, because of that level of stability and confidence that people will have in our platform, will sort of lead to other novel applications.
So you've touched on technology, you've touched on economics. Let's kind of dive into both of those. Let's start with tech. It's called Algorand, algorithm random. Like, what does that mean? Why is it important? How does this thing work?
Well, so one of the biggest differences, there's obviously proof of stake and there's proof of work. I think those are the big dividing lines. One of the things that we want to be sure is there's certain characteristics that you just simply have to have if you're going to bring high volumes of transactions and high value of transactions into the mainstream. And so the first is, Silvio believes very strongly that computational waste and electrical waste is sort of a negative for the environment and for the world in general. And so doing away with that was important to him. The second is, we really feel that forking, while incredibly innovative and has led to some large-scale A/B tests that have never really happened before, ultimately is confusing for end users. And Algorand is a system that does not fork ever. And the third is having governance built in. So on-chain governance. We're going to be announcing more about what we think about that is also a critical requirement. As is scalability and being able to scale to hundreds of millions, if not billions of users without impacting performance on the blockchain. And so there's kind of a series of design goals that led to it. But I guess the simplest way to explain how Algorand works is that we use both a combination of cryptographic sortition and a new Byzantine agreement that Silvio designed that means that every block, or for every round, a new block proposer is selected at random out of the total community of users, and then 2, a committee of verifiers is selected also at random. And the reason that's important is that it means, actually there's another step that's important to know, is that each one of those users is running their own lottery. And so the lottery is issued to all the users and it's done with a probability that ensures that we'll get the right number of votes back after to confirm a block. But what it means is that there's no communication necessary between the proposer, the verifiers, or anybody else. So nobody knows who those verifiers are. Nobody knows who the block proposer is until the block is already confirmed, and i.e. you never have an idea of who to attack. And that's really important because it alleviates a lot of the attack vectors that people can bring. In proof of work, you can attack miners, you could try to segment the network. In delegated proof of stake, there's sort of a known fixed number of people relatively that you can attack. And in Algorand, that doesn't exist because every round, everything changes. And by the time you know who validated the block, it's already onto a new group. And so, there's a lot of sort of novel methods that have gone into that. So use of VRFs, use of zero knowledge that are built into the protocol. But again, one of the fundamental ideas is that it's run by the end users who are supporting the system, and the people who are online are the ones that are doing the work, and participation is kind of a core part of the protocol, whether it's voting to confirm a block or whether it's voting voting to determine new governance, people who, whether committees or changes to the protocol or kind of anything along those lines.
Yeah, I'll just take a moment to say, so consensus algorithms are one of my favorite kind of concepts within cryptocurrencies. And what Algorand has done is very clever. Some of you guys may have heard of the idea of the scalability trilemma. Right? You can only have, you have 3 traits and pick 2 of 3, decentralization or throughput or security or safety. And one of the kind of breakthrough innovations in Algorand attempts to solve this problem is this idea of sampling, as Steven just kind of alluded to. You've got 5,000 validators out there, and for a given round, the system using this verifiably random number can sample like I think 100 or 200 or 300 for the round, and then those few hundred people can come to consensus quickly, and then the system, as a result of producing that block, generates a new random number, and that like elects the next group of people. Anyways, by using sampling as like a core part of the innovation in the system, it gets you a lot closer to really like solving this trilemma. It's a very, very clever design, and I'm very excited to see this in the wild.
Yeah, and we are too. And at MIT, actually, there was a bunch of discussion when Silvio invented the protocol and released the paper several years ago whether implementing this was actually possible. And so one of the other folks on our team, Yossi Gilad, sort of took up a bet at MIT CSAIL, their computer science department, and decided to implement it and prove that it could be done and would work. And so they did a systems test where they tested up to about 500,000 concurrent users. And sort of the short answer is, because of the way committees work and sortition works, once you get to about 75,000 users, it's not that it scales linearly, it just stops. It's the same performance after that up to any arbitrary number of users. So it scales very well. And then the other is, because of the simplicity and the way the protocol works, the only speed limit is the speed at which a block can be propagated throughout the network. And that's the most efficient that you can be, because the block has to be propagated before you can propagate the next one. And so, I think there's definitely a lot of elegance that's gone into the design.
So one angle of this is kind of, okay, you got random numbers, you got sampling, you come to consensus. You guys also have a lot of innovative ideas around economics. You've touched on kind of general price stability. You've mentioned you guys want to try and mitigate intraday stability, intraday volatility, but still allow for macro or longer term volatility. Can you walk us through why does that matter? What's the thinking? And what does it enable that is otherwise kind of a challenge?
Yeah, well, I think there's a few different points there. So one, again, like stable coins, pegged coins, currencies, there's a reason for that. Obviously, as fiat on-ramp and off-ramp, so I think there's definitely a lot of things that will evolve there. But we've spent a lot of time really looking at, if you aren't going to peg to anything, then how do you make that work? And the inspiration we really drew, again, I mentioned earlier, are systems like Singapore, or Canada. And I think one of the things that's comes up a lot in the crypto world is that volatility is somehow like conflated with speculation, which is conflated with securities. We don't, look, there's lots of stuff that people speculate on that are for sure not securities. So those two things aren't the same. And so we looked at different exchange rate policies. If you take a look at Singapore, they publish a paper online. They basically have a basket of currencies that they stabilize against. They have goalposts where they'll intervene, and then there's sort of a range where they won't. They don't tell anyone exactly what they're stabilizing against. and they don't tell anyone exactly what they're doing. They just sort of give high-level guidance. And their stated strategy is, over time, they want their dollar to appreciate relative to that basket of currencies, and then they'll sort of manage within kind of a range, but they'll shift the goalposts every once in a while. And that's kind of how we think about it. And one of the reasons why we feel strongly that relative stability is really important is that think about a decentralized world. People have to move in and out of different economies. People live just factually in certain places. At least most people live somewhere. And you need to have like ways to anchor back. So if I'm a US company and I'm buying something from a Chinese company, and we want to do that over 3 years, you need, one, swap rates so you can understand what sort of the relative, what the market thinks relatively about volatility. We also need derivative products to come up. So you need swap contracts so that we can offset risk. And if I'm in, again, if we're in 2 different places, we have different risks that we're trying to offset. And so really starting to think about, like, okay, in a decentralized world, pegging to everything to the US dollar doesn't really make sense in the long term. It for sure makes sense to have like anchors into different currencies, and we don't think that will go away. But we think if you're going to become a medium of exchange and become a platform where people are really transacting and building new financial instruments, new asset classes, and putting new protocols on top, that you really need to be kind of afloat. You need to be able to float relative to those other platforms and other currencies. And look, the best guidance that we can find, and the monetary economists that we work with suggested that some of these like smaller economies are the way to think about it. And so that's really how we think about Algorand, is an economy that we're building, and there's a series of infrastructure elements that you need, some of which are technical, some of which are economic, that will encourage not only people to transact in our economy, but will also encourage trading tactics to emerge. So if you look again at some of the smaller currencies, there's mean reversion trading that happens. There's trading around bonds. We want to encourage people to come and participate in kind of the base level currency and asset types that we present, but we also want people to come and use a series of asset primitives that we create to sort of build their own assets, build their own decentralized financial tools, and kind of see what happens when we do that.
Yeah, so to that end, you guys just had your new announcement this morning, updated website. I think the headline on the website is the blockchain for business. You guys are really focusing on financial services, financial applications. Can you walk us through like what does this mean? Like who are the first types of people you expect to use this network? What types of assets do you expect them to issue? Right? Like what's going to happen?
Yeah, sure. Well, first, I don't want to over-index or give people the wrong impression. We think finance is important, but we're not a finance-specific platform. We expect distributed apps to be built on top of Algorand. We do expect financial products. We also expect layer 2 protocols to be built that cover a variety of. And so I think one of the important things is, we're not trying to build everything ourselves. We're trying to build the plumbing that people use. But I can give an example. We have a company that we're working with. They are basically building a blockchain-based REIT, real estate investment trust, for those of you who aren't US-based. And they're looking at a series of things, but one, they're going to launch an equity fund, tokenizing property, non-fungible tokens. I think very much in line with some of the new products that we're seeing come out in the ecosystem. Separately, they're also doing a commercial lending REIT that ties into that. And so one of the things they want to be able to do is offer property that are in different jurisdictions, use an already regulated financial product that they can roll that out on, and then also use derivatives to eliminate sort of foreign exchange risk within that market. So if you think about a commercial loan, the borrower has the exact opposite risk profile of the lender. The lender doesn't want the price of the currency to go down relative to what they're thinking, and the borrower doesn't want it to go up because they don't want to have their mortgage payment go up over time. And so the nice thing there is those people have the exact opposite problem in the exact same amount. So it's very easy to create sort of canceling contracts. And I think these are the kinds of things when you start to create decentralized bundles of real estate that cover different jurisdictions, you can really create products that don't exist in the same way in any one given economy. And that's like one simple example, but we have a whole host of them that we're going to start sharing more publicly that we think represent really interesting ways to create new products that can only really exist in a decentralized platform.
So then you've talked a lot about creating all kinds of derivatives contracts, swap contracts, everything. You talked about creating plumbing. So is the intention that Algorand, the core team, is going to basically build these primitives, say, look, they're here, and like anyone come use them, or like what's that? What is it?
Well, that's part of it, but we don't think that's a very successful plan going forward. So that's only part of it. There's really kind of two things. I guess I'll get to your answer in a second, but I just wanted to bring up how we think about smart contracts, because I think that's a subtlety that is somewhat different in our world. There's a lot of, I think, discussion that goes on around virtual machines and Turing completeness and all of this. The way we've broken it down is that there are certain types of agreements that require verification, and there's other types of agreements that require computation. But there's many of the things that people are using smart contracts for today require really trivial computation, at least from our perspective. And they revolve around creating tokens, creating whether they're fungible or non-fungible, creating different asset types, having simple transactional controls, i.e. if you want to have multi-party contributors or different things. And our view is that part of the reason, look, there's tremendous innovation in Turing complete smart contracts and virtual machines, and we think needs to be a part of any platform. But we also think there's a simpler way of addressing some of these primitives, like whether they're asset-based primitives or transactional primitives, that it can enable people to build their applications in much simpler ways, but more importantly, eliminate some of this risk of a smart contract going wrong, people losing their money. We see examples of this all the time. And so one of our goals is to really bring some elements into layer one effectively and have that be more closely tied with the protocol so that you get the safety, security, finality, and performance characteristics that the protocol possesses, and then make it that it's really elements that are computationally intensive that you would use a virtual machine for and have really a Turing complete language around.
Cool. Steven, anything else you want to let folks know? Otherwise, we can open it up for questions.
No, questions is fine. How about you? Do you have anything else you want to?
Did I cover? I think I covered everything from our emails.
I think so.
I think we did.
Yeah.
Questions for Steven? You can Telegram, or I think we got a mic somewhere.
No questions?
Getting quiet, tired at the end of the day.
I guess we'll just shoot the shit now for a little.
We got 11 minutes on the clock. All right, we got one right here.
Hi, I see some similarities with Avalanche and what you're doing. In terms of the sampling. So I'm just wondering if you could compare and contrast what you know about what they're doing, perhaps.
I don't know very much about Avalanche. Do you?
I know some. I'm close with Gun, the kind of professor who's running it. Avalanche is pretty structurally different. The data model's different. How they come to consensus is pretty different. Sampling in the sense of Algorand is really, you've got a pool of 1,000 validators, 1 million validators, whatever, and for a given block, you're just picking a subset to kind of do the consensus. Avalanche is like structurally doing things in a very, very different way. We can talk offline about consensus algorithms. I've got one right here.
Can you expand a little further on how you plan to, move these goalposts around pegging the price of this token to, like, say, Bitcoin or the dollar?
Yeah, so we're going to be announcing more about some of these concepts pretty soon. So you'll hear more from us, and we'll have some papers out that sort of explain. But I can just sort of simply do a couple things. One, we are not going to have a traditional ICO of any sort. So sort of how tokens get into the market is something we spent a lot of time thinking about. So starting on the day of mainnet launch, we will have daily auctions of tokens, and those auctions will minimally go on for the first 5 years every day, but may go on longer, and we'll have to see how economic policy evolves. The other side, we will enable two mechanisms to kind of bring currency back out of circulation. One is buyback auctions. So interleaved with the auctions injecting currency, we'll also have auctions to buy it back and take them out of circulation. And then the second is bonds, which we see as a way of both establishing interest rates, but also taking a higher volume of money out of circulation. The problem with bonds is that bonds don't really help with intraday movements very much, because it takes time. Typically, bond auctions happen at a somewhat slower scale, so they're good for more kind of macro level movement, but they're not as good for like handling spot rate shifts. We think that buyback is probably a better mechanism for that in the short term. In any event, all these things will be algorithmically controlled by the protocol, so there's nobody kind of like manipulating levers, and we have some algorithms that we've created around how the protocol sort of determines like the volume and the timing of some of those elements. And so we'll share more of that soon. But again, the idea is even within sort of these treasury concepts, they'll be done in a decentralized way that really is determined by the protocol. Now, from a governance standpoint, we will bring proposals. When I say we mean we expect people from the community and from various governance functions to bring proposals forward. And ultimately, those will be voted on, and we'll be sharing more about our governance model as well. But definitely, evolution and like evolving over time is something that we think is absolutely critical in any platform, because nobody gets things right on the first shot. And so it's going to be a combination of algorithmic control and then intervention by the community if need be.
Got any other questions out there? All righty. Well, Steven, thank you so much for coming by. Congratulations on the announcement today. We're super excited about Algorand. Proud to be investors.